Hi guys, weekly market outlook today on Sunday. We're trading on the 6th of April, and with that crazy week, bloodbath on the stock markets, cryptos holding off, actually kind of quite stable so far. And the tariffs in the US, are they going to last? Are they going to increase their valuations on other assets, on other goods? That and more is what we're going to find out here in our weekly outlook here for the day. Today it's Sunday, and with that we see further risks on the horizon. Let's start with the equity side of things. The US stock market had closed the week in extremely bearish territory. Actually, the market started already with the recent drawdown a bear market. And next line in the sand, next support area, that's at least for the S&P 500, might follow recent resistance area here. That was the end of 2021, might act as a nice support area. Until then, it's just not far off, or we are not far off from that zone. It's just about at the 4,800 points level, which is where I would kind of get all in. Further explanations and further upsides, obviously, here on our website fxstrategies.asia. What else is up and running this upcoming week? The Australian dollar might be kind of quite interesting, as the Aussie had recently started to basically weaken quite a fair bit. Despite that, we have information from New Zealand as well. The Royal Bank of New Zealand might cut interest rates. That's at least the expectation. And that could have some spillover effects on the Australian dollar as well. Let's start with the Kiwi. First, how the New Zealand dollar is meant to be talked about. The New Zealand US dollar currency pair had weakened substantially here, basically off this recent sideways trading zone. Now we are right at this supportive area here, and any break of that given zone, which is 0.5550, that level, if that's going to be broken, downside momentum might occur somehow even further. We've seen that actually basically happening in the Australian dollar recently, which is why I like to build the bridge here as well with that further market sentiment here. And that might mean that the Aussie as well is kind of poised to weaken further, trading off and below the 61 support zone. Now the market had actually done exactly what we talked about beforehand, right? So with a bit of a detour though. On Thursday, stock markets in the US already fell. The Australian was rising to the upside. I was like, hey, that's from a currency point of view, not a correct movement. Let's sell the market, which is what we did, and which is where we capitalized on that move alone, because something was not right. Either equities would rather continue to rise again, or the Aussie should weaken. Boom! That's what happened last week, or this week basically. It was on a Friday, and then obviously downside might continue now full steam ahead into further downside territory. The question is now how the market is going to follow up further. Will we see from the AUD and NZD another rate cut? This could harm the New Zealand dollar. This could also have some spillover effects on the Australian dollar. That's coming on Wednesday, so a nice way for this upcoming week maybe to check out how the market performs here to the downside. Any slight retracement, anything of positivity is what might be used in order to kind of basically start the market selling off again somehow further, right? Any retracement higher might be used for the market participants to weaken further. Why? Because the S&P 500, for example, is in oversold territory. The market had kind of weakened substantially so far last week. The same is true for the NASDAQ. The NASDAQ as well tanked into negative territory here, what at least what the RSI indicator shows us. So there might be some further upside momentum. However, the question might be, and that's on the NASDAQ, how much upside will we see here? The recent resistance now turning support which actually faded or failed, which wasn't working out here, that could act now as a resistance area, and any retracement higher, whether it's even occurring this much, I would like to use for further selling opportunities to basically sell this market again to the downside and offering somehow a further negative price sentiment moving forward. The question really remains on how much momentum we will see here and how much more downside motivation there is going to be to follow in this market environment. News-wise, what do we have also next week? Thursday, we got information from the US, and that could be kind of quite important again here this upcoming week. Why? Because the information next week on Thursday in regards consumer prices might move markets. Previous President Ronald Reagan, or past American President Ronald Reagan, also stated pretty clearly, tariffs this for that. That's the current strategy, right? America rising the tariffs too much, watch towards much higher levels. China now responding with counter tariffs, so that entire situation might kind of increase itself until no way there is going to be a positive output. And I still don't know how Donald Trump wants to kind of navigate himself out of this crisis, out of that mode, because tariffs increasing, less demand from the population, more unemployment to follow. Basically, competition on a global scale, competition is going to weaken somehow further. If you don't compete, or if American companies don't have to compete among the industries with their peers globally, they don't need to basically kind of be competitive in this case, basically relying on tariffs. However, American tariffs and their adjustments fairly recently might call a bit of a big more downside or downward spiral, which would actually, and that's the current situation, which would be far worse than what we've seen during the Great Depression, and that's just about 100 years back. So focus back and look back on what we've seen in the past. This situation currently might kind of really outperform that on a negative scale, and that's exactly how dangerous this situation might be and potentially could follow. Consumer prices are expected to rise somehow further, not maybe directly, but medium term. However, the impact on that tariffs situation currently can already be seen. Stock markets, as we determined, have already weakened their momentum quite sharply. $5.4 trillion of valuations had been just kind of eradicated in the recent, I think 1 or 2 days it was, after the implementation. So we've seen that markets already were in a downtrend, right? Not only because of Donald Trump's tariffs adjustment here right now, right? So the situation was already way up here where the market found some saturation. Tech companies, if I'm remembering correctly, iPhone production prices, the cost would rise from 550 towards $850, an increase of 54% more or less, right? So all the prices would kind of rise to way higher levels, and all the prices will obviously kind of harm the economy in general. Next line in the sand here for the NASDAQ might then be the 16,400 level, and we could play it similarly, right? We could play it also with the retest of the 50 moving average. I would doubt, and I started to buying some stocks in my dividend portfolio recently, but I would not kind of wonder if the markets are going to weaken even further. So keep some powder dry for the ones of you who might actually also trade the stock markets and looking for cheaper opportunities in the equity side of things. Next week on Friday, we have GDP figures from the UK. Those might not be super interesting, but PPI data from the United States are likely going to give us further insights. PPI data, producer prices today would, with an uptick or with a kind of a reselling value, higher prices would then be consumer prices in the near future. PPI data is expected to rise as well. Those are the core PPI data on a monthly basis, 0.3%. And I would kind of think that these numbers might actually indeed rise even further, given that tariff situation and that adjustment of US policies. They might kind of cause further prices rising in the United States and beyond, because the global world, or the world globally obviously, is interconnected, right? What is produced in the US, many parts kind of are being procured from other countries globally. That said, our dollar Swissy trade had performed super nice. We kind of looked out for some entry opportunity here when the market was just about, and that's the 87.88 area. When the market was just about to maybe break that zone, we were looking for entry opportunities. Our sell stop at 87.90 was triggered, and within a couple of trading days, rising all the way towards this, that doesn't really look like a nice trend line, was nicely moving towards an initial targetable area. The next target, first target basically hit, second target down here is the question mark, might be hit as well. 83.80 for the ones of you looking for trading opportunities here. Down there, this might be of particular interest here. The market retracing, we closed quite a bit of this trade right nearly at the bottom. I saw that this wiggy kind of stuff here would be of particular interest, so we basically let the market run, because this Friday movement here, this week was just so sharp to the downside then, and we looked at this oversold territory to get out of that position, at least of some sort, in part at least. How's the oil market doing? Well, oil prices obviously kind of would give us further insights as well, and for the ones of you guys, I'll also push out those weekly details, stock market analysis, general market analysis, crypto, FX and equities markets in 3 minutes, where we analyze the oil market as well. And I said a long time ago that I believe that the oil price is going to weaken further. However, we saw a bit of a detour here. Yes, we are not in this trade at the moment, but any retracement higher towards the 66 or 67 US dollar level might be of particular interest for entry opportunities here. Any retracement to the upside could be used here. So far, the market had performed nicely. Support area. Now it looked like the market strengthened here, but boom, the 50 moving average here acting as a strong resistance obviously lasted and caused the market to weaken somehow further. We see how this goes in the near future. I expect slight uptick momentum here earlier next week, starting Monday, Tuesday, to then see maybe downside motivation. Back towards the FX world, the euro against the Japanese yen, moving sideways. It's looking interesting for further weaker opportunities here. However, I would be a bit reluctant here in this market. 159.60. So basically, if the 160 psychological support area breaks, the market might escalate its losses, causing a downshift momentum again in this next week. The Japanese yen seems to strengthen slightly. We can see the same on the dollar against the Japanese yen. However, the US dollar is obviously kind of rather on the weaker side of things, but also the dollar JPY weakening, the euro JPY weakening, the pound Japanese yen as well has been weakening quite substantially. So we see all those markets currently are really quite responsive here. Look at this technical resistance here and the pound Japanese yen. So downside motivation might be the case. The metals market, and now we move towards the silver price development here. Silver obviously kind of is a big demand and supply story we can make up looking at the tariffs situation. Dollar weakness would drive up prices at once. Secondary, we would have also the demand situation from the global economy, and if economic activity is going to be weakened basically by government decisions, and those are purely Donald Trump's decisions with his tariffs, this might cause that the silver market is going to weaken even further. I might say at some point I would be keen to buy a bit of this silver here to the upside, like in the end, maybe Donald Trump steps in front of the microphone saying like, hey, sorry guys, my idea with tariffs, let's scrap that, let's reduce them by half. It's likely not going to happen, but technically we've fallen already sharply here, and I haven't seen in my trading career at least such a sudden sharp drop in silver within just 2 trading days. We have to see, right? So this entire week was obviously kind of Thursday and Friday when the market kind of fell. Yeah, so we've seen such sharper drops in the past a lot, but within 2 days up at 34 roughly. Where were we? 33.70, then down towards the below 30 area. So that's 15% drop in the silver market. So quite a sudden movement here. And I might say, okay, the market could weaken actually even further. Obviously it could. We've seen sharper drops in silver in the longer term history here. don't remember that much, but 2011 obviously highly volatile during that time here, with those two brothers trading the silver market back then in particular. But let's go to the current situation. Upside at the upside price point at 34.30 might not happen in the near future. Downside might rather be the case, as the silver market is going to weaken sharply here, has weakened sharply, but the 50 moving average is one area of potential engagement. And let's see if the market is going to weaken further, or whether we see another uplift here. And we see that this line in the sand, and that's the nice upcoming support turning resistance zone, vice versa, 28.50, 29 area, that zone might prove another entry opportunity here, where I would be keen in picking up some silver, or at least maybe selling some naked options here, selling some put options here, looking kind of quite a nice zone of engagement here with market motivation. Looking at relative strength index, yeah, it is at oversold territory. This could kind of tell us that at least short term another upside momentum might occur, but the silver market, yeah, if the demand situation from silver by a weakening, dampened economic activity is going to weaken further, we shouldn't just basically kind of take a falling knife and take the falling knife into our hands. So let's look at the charts here. Silver market now, this zone I've just marked in here. So resistance here, support now on the right, 28.50. Sudden drop here. That's about it. The daily chart, basically oversold territory reached from the RSI indicator here, and those were these two trading days here in a row, which acted obviously kind of quite negative here in this silver market, potentially indicating that further weakness might be on the cards, but I would wait at around this area here to buy some silver in the near future. The gold price also similarly weakening, and I might say this is because traders were trying to get out of something which they've had for quite a while in their portfolio, where they want to liquidate their risky positions, in this case their trading positions, because now the market looks like being set in a bit of a retracement mode after these skyrocketing movements we've seen sideways price action. And I might say, okay, it could be time that the gold price is just about to weaken further. We've seen this here, a strong move to the upside followed by a downside motivation, a strong move to the upside followed by sideways price action here, a strong move to the upside, and maybe followed by a potential further sideways price pattern, which we could take into consideration here. Looking at it from the Fibonacci retracement point of view, we might say, okay, should we trade all the way towards the 50, we would end at 2,380 US dollars. If the market corrects only towards the 23.6 Fib retracement, we would end at the 2,780 level. So we have quite a few ranges here, or quite a few areas of engagement where we might say those could kind of prove interesting here. What's that zone? That's not a zone. It's between the 61 and 100% Fib retracement, but 1,800 US dollars as well. Only if the global financial situation will calm, we might see that the downside will stop and the upside is going to strengthen potentially somehow further. However, on the other hand, currently we might say if the upside is going to follow, or we could see an upside momentum to follow if there will be more bloodbath in the stock markets. But initially, I might say that traders would liquidate some positions which they made a ton of money. We saw that in the equity side of things, US technology stocks had been among the biggest losers. How much it was? 35% drawdown in some of the assets from the upside. And currently those gold prices weakening because traders want to free some cash, free some margin maybe, in order to kind of use that for their positions which are now down in the shits, potentially causing downside motivation. So that's my idea here in gold. If obviously financial system will stabilize again, this could kind of cause the market also to rise somehow based on US dollar weakness. However, if we see some sudden strength in the dollar as well, we might see that this harms the gold price causing gold to weaken potentially further. Last but not least, we have also the crypto space ahead of us, and Bitcoin among others. Let's stay with Bitcoin is gonna weaken potentially further. I tell you why. Stock market wise, cryptos have followed up with the NASDAQ in particular. Fairly recently, they really traded strongly, right? So Bitcoin was not following up with weakness on Thursday and Friday this week so far. Instead, it was just behaving in a sideways pattern with some sort of weakness here. However, recent resistance, this area we kind of talked about quite a few times in the past, might now act as support. If the 50 moving average doesn't hold, I might say the 71,000 US dollar level here would be engagement level number 2. So 2 entry opportunities I see here. 77 something, I would start to buy some. Fairly recently on Trump Day, Freedom Day, however you want to call it, day of announcements, I closed all my Bitcoin here and waiting for prices to weaken in order to kind of get cheaper access to markets. Altcoins might not perform as nicely as the Bitcoin market has been doing so far, and Ethereum has kind of weakened sharply further. And Ethereum is also now obviously kind of quite interesting for those who want to trade a bit more on the edge, because the 50 moving average might give us further insights here. The 50 moving average, if broken, was kind of really regained momentum despite a long sideways pattern. But here, the 50 moving average might also kind of really find its bottom at this area, and then hence obviously kind of start and cause the market to rise back to upside momentum. That's for the Ethereum market. I wouldn't kind of see that this is extremely negative, but I might say this market could weaken even further. So as the market goes lower, and that's the utmost low, I might say, resistance on the left here, 1,135. We are now kind of 40% or higher comparing that figure here. That's the area which I like to take into consideration to get fresh buying opportunities in this case. XRP, I'm still on the short side of things. Short positions working out nicely. I see several areas. I don't see any reason why XRP should move higher. Again, maybe that's what I should leave to those crypto maniac guys here. But some of them who told me as well, Frank, you are way too bearish. This is going to move to 5. I said, you are way too bullish. I see it from a trader's perspective, and we saw a push higher, correction, push higher, correction, now push higher, and well, you know it. My stand here, 160. The least minimum I would like to see this market to move lower, maybe rather something like 0.83 cents. And then medium term, why not? This market might increase its value again. I wouldn't see that there's anything bad. Obviously, positivity could indeed come with any ETF in XRP approved, which is at least why this market currently looks to me, why it's gonna hold up steady comparing at least other assets, other crypto assets in comparison. Solana, last but not least, kind of currently flirting also with a 50 moving average, having broken below might indicate further weakness. I don't think that this is overly bad. I see further momentum here at some point. I still have some Ethereum and I have a little bit of Solana as well, so we shall see on how it performs, but I quite like it and would like to wait for this market to maybe be reactive positively, at least at some point. Consumer sentiment from the US, that's something we'll round up next week on a Friday. Might move market motivation. Guys, in the meantime, thanks for watching the video. If you made it towards the very end, great. And leave your comments below this video. We have a couple of shorter ones coming out next week. Expect some talk with Merkel again here from Phuket about dividend stocks. He has some interesting ideas that we're going to check out next week. And moving to Singapore, I want to make an appointment. Let's see if he's free. If so, we get a super VIP guy in the front of the microphone. So guys, stay tuned, stay focused, and watch FX Strategies, of course, as well. See you later. Take care, everyone. Ciao, ciao.